Make sure you watch this video to the end. What's up, everyone? My name is Sean Rampersaud with the Mortgage Group, and today I'm going to be talking to you about what's going on with the Bank of Canada announcement, as well as the overall real estate and mortgage market for November of 2025. Now, if you're a real estate agent, pay extra attention. There's some things in this video that I'm going to talk about that are affecting your clients directly. So first, let's talk about what happened. The Bank of Canada yesterday announced that they are lowering their policy rate from 2.5% to 2.25%, meaning that there's a 0.25% rate cut. Now, there's some major confusion going on in the market about this. So what I've seen is I've seen some real estate agents advertising on TikTok and on Facebook that the new rates are 2.25%. That is incorrect. So make sure you watch till the end of this video so I can explain in detail exactly how this rate cut works so that you can explain it to your clients directly. Now, at the same time, while the Bank of Canada was making that rate cut announcement, they also said to rooters that they were going to stop the rate cuts. So there's not any more significant rate cuts coming. If you have clients that are sitting on the fence waiting to buy a property right now, you can let them know that there aren't going to be any more rate cuts to the variable rate this year, and there may not be any rate cuts happening next year either. The overall bank outlook in Canada is very cautious. So what they're saying is that growth in Canada is only at 1.1% for 2025. For 2026, they're talking about a 2.2% overall growth for Canada. And inflation is still sitting at 2.5%. So what does that mean for the rest of us? Well, it means the market is not going to change significantly. I know some provinces like Alberta absolutely will and can see an increase in overall traffic just due to people moving to the province. But the overall scope of the rest of the country is not significant growth. Now, what does this mean for your clients? Okay. So what it means exactly is that the variable rate is going down by 2.25%. That's what the Bank of Canada, if you really want to simplify it, that's what the Bank of Canada announcement means. It means that the variable rate's going down to 0.25%. So what's going to happen to the fixed rates? Well, who knows? The fixed rates are not directly impacted at all by these Bank of Canada changes. However, it is causing some of the banks to get into a little bit of a competition with each other to lower rates. That's why we're seeing some fixed rates go down. But it's not going to significantly impact the fixed rates very much. It's the variable rates that are directly impacted. Now, I want to spell this out for you in very simple terms so that you can understand it. And I know that this stuff can be a little bit confusing, but every single bank has its own prime rate, okay? And that's the number that the bank works off of. This is not a whole Canada thing. So the prime rate at some of the banks right now is 4.45%. The prime rate at other banks, such as TD Bank, is even higher. So what the banks do is they go prime minus something for the variable rate. So right now, my lowest rate is prime minus 0.8. So I have to look at that specific bank that's offering its prime rate is 4.45 minus 0.8. The minus 0.8 is what you will always get. Okay. The prime rate is the one that went down. So it went down by 0.25% to 4.45%. So that's the number that was affected, was the 4.45. Now the prime, 4.45 minus the 0.8% equals 3.65%. And that is my absolute lowest variable rate right now. So let's talk rates. Like I said, my variable rate, the lowest is 3.65. The fixed rates, the lowest is 3.89% right now, and that's for a 5-year fixed. Some people are asking me, should I wait for rates to fall more? I don't think anyone should wait for rates to fall more now. The variable rate right now is at a low, and they're not going to be doing any more decreases to the variable rate. So if you have clients sitting on the fence right now, waiting to buy a property because they're waiting for rates to go down, then I would say let them know that they're at the bottom right now for variable rates. And it could be a trap waiting and waiting for property or for rates to go down, because then they're not considering that property values in some provinces are increasing. So they're losing out overall. Last month, I saved 12 deals from falling apart that were declined at the bank or at other mortgage brokers. This is significant for me, and it makes me extremely happy because 12 families were able to achieve their goal of home ownership, and 24 agents were able to earn a living. And that's significant. Working with the right mortgage broker absolutely matters. It will help you make more money in the end if you're working with a good mortgage broker. For a consumer, working with a good mortgage broker will also mean the difference between getting declined or getting approved, getting a good rate or getting a bad rate. So this is what I do differently. I work with over 100 different lenders, and what I do is I don't fit your clients into the square box of one lender. The lenders have black and white policies. I don't. So I study all the lenders, I learn their policies, and I fit your client wherever they belong and are going to get approved. The probability of approval through me is higher than other brokers and other banks because I study the product. I also have multiple heads looking on it, 3 underwriters all looking at every single file to see how we can figure out on how to get those clients approved. And I have long-standing relationships with the banks where I can ask for exceptions. So if you want to increase your chances and your probability of closing a transaction this year, give me a call anytime. I am looking to work with some new agents. And if you're tired of brokers or banks not answering their phone, reach out to me and see what happens.